we're taking a look at the COT data. I thought one thing that I will say about the COT data that stuck out to me was have a look at gold. Take a look and we can see gold yet again, guys. Again, let's look at the chart, right? Just context. Gold has been in kind of a little upward channel recently, but the longer term, the daily chart has been really bearish. Well, I pulled up the gold on the EDGEFINDER here, Frank, and what I saw is that while there's still a heavy bias to the long side on gold in terms of number of contracts long versus number of contracts short, what I find really interesting is that as of the most recent filing that we just got on Friday, we had another decrease in longs. So they're closing long positions. And when I say they, I'm talking about hedge funds and asset manager groups that have to report to the CFTC. Huge decrease in longs and a huge increase in shorts. So again, yes, there's still a bias overall to the upside in terms of positioning. There's still net more long. This has been changing for a while, hasn't it, Frank? I mean, gold, what do you think about this? I thought this one just stuck out to me.
Yeah, so if you scroll down to the positional bias, and
Yes.
you can pull up gold on that too. And okay, we'll do my screen. And if you pull
Okay.
up gold, you'll see, so the net long positions overall for the past 3-4 weeks have been coming down quite a bit. So usually this is a sign that sentiment is flipping. I mean, it can come back up again like in the weeks to come, but this pattern overall is that it's just falling, and so is price. And even if you were to pull up gold on the 1 day or 4 hour, it still doesn't look strong. It had a breakout, but like overall, I think gold is going to be pretty weak. And again, watching the 2-year yield, still at above 5%, I believe, but just a lot of things going against it right now. So I think it's justified that smart money is not looking to go long or bullish on this asset for a while, and I'll probably be looking for shorts this week.
Yeah, I tend to agree, Frank, and I'll show you my chart here. In terms of what we've been seeing price action wise, there's been this kind of higher low series going on recently. This is the 4-hour chart on the gold, a little bit lower time frame than, of course, like the daily chart, which we're kind of looking at a little bit context wise. The thing is for me with gold is if this thing cracks, right? If this thing breaks through this level, this would be a really, really interesting short idea for me. Kind of if the short-term uptrend that we've been seeing, if that gives way to the longer-term downtrend, right? Here's the daily chart. We've been in this downward trend. We're seeing a little bit of a revival move for gold. If we start to see that crack and start to break lower, I think you may see price head back down to 1885 to test that level once more. And if that level breaks, again, you've got lots of room down to like that 1810 level, which I think we've talked about in the past. So you also mentioned, Frank, you've got the 2-year. Do you want to pull that up for us just to show us what you're talking about and tell us also why I guess that matters so much to gold's price?
Yeah, hold on one sec. So the 2-year yield is short-term interest rates, like just forward looking what they'll be like in 2 years basically. But what it does is it's directly correlated with the dollar and indirectly with gold, I guess. So in a negative way, it's correlated with gold, but seeing this rise is like, I guess you could call it just like instant strength in the dollar. So every time you see it rise, we've been seeing it rise the past couple weeks now pretty steeply, and the dollar has taken off as well. So those dollar pairs are going up. We've seen stocks kind of struggle. There are a lot of other factors in the stock market, but watching this rise has been pretty impactful to the stock market, dollar, gold. So every time we see this rise, or I would say even above 5%, I think this was a very restrictive level, and the fact that it's above it now is pretty concerning to gold. in the short term at least.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Stocks, that's a different story, but I think watching it stay above these levels for a long time is going to be kind of impactful on gold's price. So
yeah, I would tend to agree. And again, it's one of those things too. There's a little bit of an opportunity cost effect when we talk about, the gold market, right? When you talk about gold, sometimes people don't understand this, or they're not, fully aware of the fact that gold and bonds, they have competition between each other. The question is, let's say that you're somebody who is parking money. You're a hedge fund manager and you manage, $5 billion, and you need to put money away for your clients. Do you want to put it in gold or do you want to put it in bonds? Well, some people might say, oh, gold, and other people might say, oh, bonds. But if the yield rises on bonds and makes it more attractive, comparatively speaking, to gold, that's also a negative thing to gold, because the opportunity cost of buying gold is not it would be better just to be in bonds, right? So that's kind of a little bit of the play I think that also might be occurring. You have the opportunity cost, the yield rising, causing dollar strength, which quotes gold weaker. And then, of course, it also has to do with bonds. So yeah, Frank, before we move on, I wanted to ask, is there anything else on the COT report that stuck out to you this week?
Yeah, so I wanted to talk about the indices. From smart money standpoint, they look pretty bearish. The NAS might be the only exception, but it doesn't look...
Which I'm glad to hear, because I'm long on that one, Frank. Speak carefully to me.
I also feel like maybe a long could work out, so I'm considering that too, and that's not because of smart money, but because of where these indices are right now. If you pull up the US 30 or the SPX or the NAS on a one-day chart, they all came down to this really significant level of support, and they have not been able to break under. So it keeps suggesting, especially on the NAS twice in a row, that buyers are stepping in every time it hits this level. And I don't know, is the worst over? We've had Jackson Hole come out with, Powell saying basically the same thing. Everyone took it as high hawkishness or whatever, but I don't know. I feel like it might be worth trying out. If it breaks under, you're pretty close to the trend line anyways, so your stops don't have to be super wide. But yeah,
Ivan and I, we discuss a lot of things like seasonality, right? Like these concepts of typical patterns that have occurred over time in the markets. For whatever reason, it really doesn't matter, but there are usually some reasons. But the point is, Ivan and I have been discussing the fact that kind of in terms of yen weakness, seasonally, it generally is weaker during this time of the year. And so if you know that, it can actually be a great way to spot opportunities. So what other yen pairs, Ivan, are you talking about? And while you do that, I'm going to pull up some seasonal data just to showcase to people.
Okay, I just want to say, though, on Friday, in the VIP group, we said 94.10 should be a place to look for a buy, if whatever reasons you have to enter, if it makes a new higher high. So this morning, it made a new higher high, probably evening for you, and then it came back down to London. So if you guys didn't do your job, that's kind of up to you. But there is no trading signals here whatsoever. Anyways, New Zealand yen is another one that I have tried to have an entry on. It's kind of coming back to break even yet on a millionth time. British pound, Japanese yen. It needs to break 184.60. come back to support. So I'm just waiting for this one to come back, and it should at least go higher. Now, this is aggressive by any chance, by any means. This isn't advisable if you haven't done the back testing, if you don't know that this situation does work for you statistically. You shouldn't be in this by any means, by any fire. Don't follow me. People have done that. I'm like, please don't.
Sure.
This is not a game.
Yeah, right. No, and I wanted to follow up with you on top of this concept. Again, you've been very focused, and I want to point this out to the audience as well. If you guys watch the shows every day, if you're the type of person who shows up to these streams every single day, and you know that Mondays are Ivan's days to come on and hang out with us for a little bit, then you've heard us talk about this over and over. Ivan is very, very focused on a specific thing. I mean, when you came on, I was like, you still doing yen pairs? Because I know, Ivan and everybody who comes on our show, specialization is very important. So I wanted to just point out a little bit of what Ivan was talking about with the yen pairs. Take a look at euro yen, for example. We can see that September, which we are knocking on the door of September, it is a couple days from here, we see historically a expectation to go higher for the euro Japanese yen. We can also take a look at, let's go to USDJPY, another one here. Look at this, strong seasonal expectations here for the dollar yen, at least in the last 10 years of recorded data. We can see there's typically a nice little resurgence in the dollar yen. So perhaps that's something that you as a trader could take advantage of. So I wanted to point that out just visually with what Ivan is saying. He's got some trades. He's looking to build positions on winners. I really like that approach. So outside of that, do you have any thoughts on dollar yen, Ivan? Of course, this week is really big with we have NFP at the end of the week, which the markets will pay close attention to. Are you staying away from dollar yen? Do you like other ones better?
I do only yen, okay? And then USDN kind of goes in there, but I kind of don't like it because if you go back to when we're clear risk on, which is kind of what I'm trying to trade here, is that you use yen trades like 5%. In the same time frame, Aussie yen do like 20, 30, 40 percent. So it's dramatically different. But the thing is, the reason why I need to watch it because Bank Japan watches it. And a year ago, they intervened in the market around 150. 1, 2. So I need to be, if you go too fast to 152, I will be shaking in my pants. I'll probably run away because that might need to have another intervention because last year it went too fast, too quickly, and we are going up to the same price again. So that's the only reason why I need to watch USDN.
That's a good point, though, too, because, again, the U.S. and Japan, both really major economies, and the central bank, for people who are newer, perhaps they are not familiar with that concept, the Bank of Japan, they watch this currency exchange, as Ivan is pointing out, so importantly because, of course, so much global trade happens between these two currencies, right? So last year, we saw intervention from the Bank of Japan. They were like, we don't like this level. We're going to support our currency, and it's going to go back the other way. So it's almost like, Ivan, is there a good chance that perhaps we see the dollar yen come back to try that level out again? Perhaps there's a trade in the meantime, but the side caveat, the side note is be very careful because the second the Bank of Japan does step back in for intervention, that's where we see those 300 pip swings very, very quickly. So you got to be very careful with that stuff.
It was 400 pips the first time they tried on some of the pairs. But so the question last year was it was too quickly. Now we go maybe a bit slower. The other thing is they're threatened from February to September until actually did something. So every week they said we're going to intervene, we're going to intervene. So the problem is that Japan is the country that has the biggest cash reserve in dollar and bonds. So if dollar strengthens, their yen weakens, and the problem they have is that they are buying, for example, all their oil is import. They don't produce their own, so that becomes incredibly more expensive the more this one goes higher. So and also it's for business. It's not great to have this unstable price movement, even though it's one direction. So I kind of see what it would do, but I'm just. Don't do it now. Don't do it now. Don't do it now.
Sure, fair enough. Yeah, no, I think the dollar yen it's a crazy currency pair. One of the big pros, of course, with trading the dollar yen is it's very, very the spreads are pretty great compared to some currency pairs you get better or worse, but it is one of those majors. And like Ivan just pointed out, they do so much transactions and so much cash reserves on both sides for the dollar and for the yen. So it does create a lot of liquidity there, which could be nice. What about, so you got Swiss yen pulled up. Any ideas on this one?
You know,
I never thought I'd see you talking Swiss yen, Ivan. This is a new one for me. All right.
No, well, I'm not going to trade it because people want to see it. And I'm like, there is a trade. It has already gone. Probably look for trend continuation. This is one of the ones that doesn't perform in my previous years, but this year has been fantastic. But I'm not part of the trend. So should you this year? Totally up to you. This is a part of the yen moves. This also goes in the yen direction. So at least I don't want people to try to fight the trend. But if you find me buying this, please come and knock me out.
Yeah, that's fair. And one of the difficulties of trading this currency pair is that it's two risk-off currencies, right? The Swiss franc as well as the Japanese yen tend to be global kind of safe haven currencies, so it can sometimes create some choppiness between the two. But this year it seems to be trending a little bit different. So we'll see how that one wants to play out. What about euro yen here?
Oh, I'm waiting for. Yesterday I made a fantastic trade plan. I'm like, if it comes down to 157.85, I'll buy it. If it comes down to 157.65, I'll buy it. It never came down.
It left you behind. Yeah. Those are tough.
Well, that's a new concept.
Yeah, I could totally relate on that for sure. Yeah, so I also think that this week will be really impactful too, Ivan. What do you think about a lot of USD news outside of the yen? Are you trading any dollar pairs this week, or are you kind of avoiding them?
I'm 100% avoiding dollar pairs. We have quite strong dollar at the moment. I'm kind of wary about are we going to bearish soon because we've been a bit overstretched. NFP can provide that. But it's only when people are fed up. If you check out the CME, people have been starting to price in even more rate hikes than before, going on for maybe another rate hike in December. For me, that then of course leads to dollar bullishness. So I try to stay away because to me it's a bit clouded. It's not very direct, very straightforward.
Sure.
So, and also it's it's already bearish. So unless I sell the resistance.
Sure. Yeah. No. I mean, that's the thing is sometimes the best trades are the ones that are just the most obvious in the room and being patient on them. The yen one makes sense to me as well. Generally speaking, the world is in a little bit more of a risk on state than it was perhaps a year ago. You also have seasonality, as we've discussed here. So, it's an interesting time to be a yen bear and bull on the counters to the yen. So will be very interesting to see from there.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.